Hello, hello. Welcome. Hi, thanks for joining. Better turn off my phone. Welcome to the Florida Homebuyer Seminar. I'm Randy Jenkins, and I'm thankful and grateful that you chose to join us tonight. Hope to give you a lot of content and give you a very good handle on what it is that buying homes is all about. If you don't mind, if you could type in the participant meeting chat box where you're watching from, it'd be great. I see we have Ali and Jose and Carla. Nice little groupage. Perhaps we'll have a better Q&A without so many people. But we're going to start, although statistically it's a lot of people won't be joining for the next 30 to 90 seconds. I am going to give you a lot of content. It's going to be about the mistakes that people make. I'm going to do another session on how to buy a home. And I have some down payment resources that I wanted to share with you that I'm very excited about. All right, it's 7:01, so we're going to start now. This is the Florida Homebuyer Seminar, and I'm Randal Jenkins. Thank you for joining me. In this webinar, we're going to cover the mistakes that you do not want to make. We're going to talk about how to shop for a property. We're going to talk about mortgages, and we're going to talk about first-time home buyers. Generally speaking, when people do a real estate transaction, it's a stressful event. And for a first-time home buyer, it can be especially stressful. And if you have, and the truth is, even if you have done a transaction before, you're going to find out that every transaction is stressful. It's normal. No one wants to make a mistake. Every transaction has risk. And what we like to do is try to mitigate the risk. And what I'm going to do is I'm going to give you a whole lot of content, and then I'm going to invite you to book a call with me. In the chat, there is a link that will allow you to book a call. And I'll invite you throughout the webinar to book a call with me. My goal is education. I'd like to help you identify where you are in the process. I'd like to really reinforce the fact that you want to use other people's experiences so that, these mistakes that people make, they're repetitive. You're a first-time home buyer or you've only done a few transactions, it's very likely that you will not know what to do. How do you know what to do until you do it? So I hope to give you directions and I hope to help you make a plan. And that's what it is. I'll discuss later on how if you start off today to buy a home or working on the process of buying a home, you're 5 to 8 months away on average to actually accomplishing it. So what I found is I've watched a lot of these webinars, and there's a propensity to get very technical, to baffle the audience with details that are maybe not necessary or appropriate in a group setting. And I think it comes from the idea that if a subject is really complex, then you'll throw in the towel and say, can you do this for me? And what I'd like you to do is to relax. I invite you to not take notes. Instead, if you want to do anything, write down questions. And then when we get together in either a Q&A or if you book a call, then what we'll do is we'll go over the questions that you have. And just remember, this is about education. And in one section, I'm going to show you something that nobody talks about in the mortgage process. We go behind the curtain. And I'm going to give you some inside information that truthfully, after I've been in real estate for 25 years, and I did not realize until the last 3 or 4 years what I'm going to show you. It's not that you have to learn this, but it's just so interesting in the educational process to have this understanding. All right, I'm Randy Jenkins, Randal Jenkins, 25 years in real estate. I have a real estate investment company. I spent 18 years in the financial services industry. I was a stockbroker, bond broker, insurance. And my quote is, you are not doing real estate today. You are getting ready to do real estate. And that's why the education part of it is so critical. All right, I mentioned this earlier. Statistics show that you're 5 to 8 months away from doing a transaction. So you've got two choices. You can find a house and see if you can pay for it, or you can find the money first and then go shopping. And hopefully by the end of this webinar, you're going to understand why finding the house first is a tease and that you should really find the money first. And we'll talk about that here. If you Google what are the steps to home ownerships, it tells you 3 things. Not come to this class. I stuck that in there. It says get a pre-approval, go shopping, move into your dream house. And boy, is that simplistic. And that's just not right because there is a lot more to it. And I just realized my screen is not perfect. Let me work on that for a second. Okay. So now we're going to move on to the next. And now that I've got my screen appropriate, I can do it. All right. So some of you came into this thing with the idea of seeing what the mistakes are. And the biggest mistake is ignoring home buyer incentive programs. And believe it or not, Googling down payment assistance is not a good thing to do, but I'm going to show you how to get down payment assistance programs. And I just realized that the screen that I want to show you down payment assistance is not opened. But if you allow me to jump on a one-on-one Zoom call with you, I will show you where you can go to get real down payment assistance programs, not the down payment assistance programs that are, if you Google down payment assistance programs, you get a whole bunch of mortgage brokers that are going to try to lure you into their platform so that they can sell you their mortgage services. And I invite you to don't do that. Come see me. And moving on. What is a first-time home buyer program? There are grants. There are opportunities specific to your region. Some of them are dependent upon your income. Some of them are forgivable second mortgages. Some of them are strictly real down payment assistance programs. Now, you don't need to know this yet, but when you go to apply for a mortgage, your credit and income is going to give you, it's going to spit out solutions. Some of you are going to qualify for an FHA mortgage. Some of you are going to require a conventional mortgage. Some of you will be buying in rural areas where you can get a USDA loan. And then if you're military, you can get a VA loan. And truthfully, you don't need to know any of this right now. What you need to do is to just relax and breathe in through your nose, out through your mouth. You can't believe how much counseling we do with buyers because the stress level it can be extraordinary. This is the biggest transaction that you're likely to do in your life. And if you're stressed, if you're not stressed, then good for you. But I'm telling you, this is a stressful thing. Some of the government agencies, Federal Housing Authority or FHA, Federal Housing Administration, provides mortgages for challenging, let's say the more challenging credit and income situations. First-time home buyers, a lot of you will end up going FHA. I'm going to spend a lot of time talking about FHA, and I'm going to introduce you to it on this slideshow right now. And now you're introduced. FHA loans are as low as 3.5% normally, and I'm going to go into an exception for that. You can get in with a credit score of 580. And if you put more money down, you can get in with a lower credit score. Financing is challenging regardless of what kind of mortgage you get. but the mortgage rates are lower in some cases for FHA mortgages. They'll accept a higher debt to income ratio. You don't need to know this. Uh, and you can choose between a 15-year and a 30-year fixed rate or adjustable. And then the down payment assistance programs and grants are acceptable with FHA. And sellers can pay up to 6% of your closing fees. And if you're not familiar with this, we'll spend a little bit of time on this because the fees of buying a house, it's not cheap. I'm going to go right through every bit of the closing fees that you can expect. But and one of my big things is counseling buyers on how crazy sellers can be, and then counseling buyers on how you go into a shopping mode with the right information. I mean, I see so many buyers out there and they're not prepared mentally, or they're not coached on what they need to do in the realization of the challenge that they face. All right, I told you there's an exception to the FHA rule. Right now, because so many of the counties had disasters, there's something called a FHA 403H mortgage. These are only going to be available for the next 9 or 10 months. And I'll go through the counties that where you can qualify. So if you're on the coast or you were beat up by Milton, Hurricane Milton, or Hurricane Helene, there is a no money down FHA mortgage called a 403H. It's only available after presidential designated disaster zones. And if you can get the seller to pay the closing fees, all you're going to need are your inspection fees. And I'll go through that list and show you what those are going to be involved. You know, what does it take to buy a house? Can I do it for no money down? Yeah, kind of, sort of, but it's still going to cost you money. So the down payment can be as little as zero. And it's an unusual situation. It's a great opportunity in the marketplace if you're shopping and you don't have a lot of resources. A conventional loan is another home buyer program. It's basically everything that's not a government loan is a conventional loan. Generally speaking, conventional loans will require a larger down payment. And if you can afford a conventional loan, in a lot of ways, a conventional loan is going to be better because you're not going to have to pay private mortgage insurance. And I don't mean to overwhelm you with a lot of terms that I don't explain, but you don't want private mortgage insurance. If you can get away with it, it's an extra $150, $200 or more a month. So if you can get a conventional loan, if you've got the down payment, then that's the way you want to go. All right, what you can and cannot use for down payment, you can use your 401k, you can use gift money, you can use your stocks and bonds, but you cannot use credit cards, loans, or undocumented cash. If you have a lot of cash and you don't have it in the bank, then you may need to spend some time documenting, creating your undocumented cash into usable cash. And you can do this legally as long as you can justify where the money came from. I have one customer right now. He's taken 8 years of paychecks and cashed them. He's got $100,000 in cash, and it's a big problem. But because he can document that he didn't have a bank account, and he made money for the last who knows how many years, and not one time did he put it in the bank. So he can go into the bank with that cash and say, look, here's my payroll for the last 10 years, and fill out their documents, and he'll be fine. We don't need to go in there. We don't need to go in there. All right, so I'm supposed to every now and then remind you that if you want to get together with me and do a get together on the phone, that you do a set up a call with me, and I'm supposed to put it in the box every now and then, and this is supposed to make me remind me to put it in the box. So there's a uh, booking to book a call with me, and we'll go over any questions you have one-on-one. In the group ceremony, in the group presentation, I'm okay with doing some Q&A, but some things are not appropriate in a group setting, and I don't want to embarrass anybody or put you in a situation where you've got some confidentiality, and I don't want to do that in a group setting. All right, mistake number 2 is not getting a pre-approval. Now I'm going to go into another part of the presentation, and we've gone 15 minutes, so I want to make this a good solid hour. I don't want to go over, so I might be a little quick through some of these slides, but you got a choice. I told you in one of the earlier slides, you can get you can find the money, or you can find a house and then find the money. The problem is that nobody will take an offer from you without a pre-approval or a proof of funds. So, in the pre-approval for me is so important because I need to know if you're FHA. And I'm going to spend some time on FHA and the challenge that FHA buyers have. And if you're a first-time home buyer, you're likely going to go FHA. And if you haven't been counseled on the challenges of getting an FHA loan, well, you're going to be truly informed in this 1 hour we're going to cover. So get a pre-approval. Credit, income, assets. You need to know what you're qualified for. I don't want to overwhelm you by going too much in depth on this. When we get into a one-on-one call and I get a chance to get to know you and look at your situation, then we'll know exactly what type of situation you're in as far as being able to get a pre-qualification. You know, this is a presentation on the mistakes. So let's just go through the don'ts. Don't make any large purchases. Don't change your bank accounts or make any large cash deposits unless you're like, 5 or 6 or 8 months out. In that last 90 days, actually, they're going to require 12 months of bank statements. So if you have some large cash deposits, you better be able to explain them. Don't do any transfer balances. Don't close any credit card accounts. Don't consolidate your debt into 1 or 2 credit cards. Don't apply for new credit or take out a new loan. And don't co-sign for a loan. And don't max out or overcharge your credit card accounts. And here's a weird one that didn't make the list. If you've got old 5-7-year-old debt and you think paying it off will make you look better, it won't. It will actually start a new date. So if you have some 3 or 5-year-old bad credit and you go and pay it off, it's going to become a current event on your credit. And you will suddenly have 36 months of late pays. But if it was a charge off from 3 or 5 years ago, it's not going to be on your current credit. So don't pay off any old nasty credit or charge offs that you think will make you look prettier. It won't. All right, mistake number 3, using your bank. Most banks will charge a origination fee or discount points. For large banks, you're just a number. They have thousands of them. Large banks typically have stricter guidelines and they won't cater to specific situations outside their general box. Large banks may not allow you to use down payment assistance. A bank is like a retail lender. It's like going to Walmart. You pay what they want. If you don't fit their model, you're going to get rejected. You're better off going with somebody who has a lot of different options and that's going to counsel you. A guy like me or a gal like me. Well, I mean, a person like me. Anyway, a mortgage loan officer that has access to a lot of dozens or hundreds of lenders can help you shop for a lender with your particular situation. And I'm going to go into that in depth, but just realize that your situation is unlike anyone else's. And for you to get through to where you want to be, the bank is going to say, yes, you fit our model, we'll lend you the money. But most people are going to have to go through some creativeness. You're going to need a problem solver. You're going to need a bunch of different options or one option that will work. And if the bank option doesn't work, you're going to have to go with somebody that has a lot of options. And that's what makes a mortgage broker more attractive. All right, new construction is a great option for a lot of reasons, but the builders, the representative at the builder, if you go into the model home, they work for the builder. They're not there to help you. They are smart and they are knowledgeable and they know how to induce you into making a transaction that is not in your best interests. And that's why if you want to buy new construction, if you go with a realtor that will look out for your needs, they will protect you. Whereas the agent uh, at the model may very well be a realtor, but they're not your realtor. And they have tricks. It's like going into a car lot. You got to know that that salesman is not looking out for your best interests, and you need to be very careful if you're going to buy new construction. All right, skipping a home inspection you can't skip the home inspection. I mean, it's on these slides as one of the biggest mistakes people made, but frankly speaking, if you're getting a mortgage, you're going to have to do an inspection to get insurance. So if you're a cash buyer, get a home inspection anyway. All right. In my opinion, the negotiation does not start until the inspection ends. And I can give you hundreds of stories of how I mean, you could actually make an offer that's above what you're willing to pay and then use the home inspection as a way to get a better price. And, using a realtor for this is key. But the negotiation doesn't start until the home inspection ends. And the home inspection is going to find some issues. I promise you. One of the things about the home inspection is finding out about deal breakers. You may very well find a home that meets all your needs, but then during the home inspection period, you find out that there are issues beyond structural and safety and mold and radon and carbon monoxide and non-permitted remodels and illegal extensions. And I don't want to scare you off. Everybody wants to buy a home. If you're renting right now, you're paying somebody else's mortgage, and that's just what you want to get out of. If you can get into a home, you want to get into a home, but you don't want to be taken advantage by sellers who, although they're required to give you a property disclosure form, they may very well not tell the truth on the form. All right, here it is. Not being properly coached in your home buying process. I've sold a lot of homes over the years, and I can tell you dozens or even hundreds of stories of buyers who had no idea what they were doing in the home buying process. If you come to me and you get a mortgage approval with me and you're going FHA, you have some challenges to overcome. And I'm going to coach you on that in the next set of slides. So we're going to recap. Don't ignore first-time home buyer incentive programs. Get a pre-approval. Don't go to your bank for a mortgage. Use a broker with access to multiple lenders. Don't skip the home inspection. Don't buy directly from a builder. You will get a better deal if you have somebody representing you when your representative goes up against that builder's representative. Have an agent represent you to ensure your best interest, and then not being coached on how to buy a property. I'm going to show you how sellers behave. Nobody talks about sellers, but I've worked with so many sellers, and they all have these weird idiosyncrasies, not the same ones. Every time you're going to get into a situation, it's going to be different. You don't know what you don't know, and you don't want to get your education from your bad experiences. You talk to the people that you know that own houses and ask them, what did you learn from buying a house? And you're going to hear some horrible stories of experiences that people have had in the home buying process where they wished they had more knowledge going into it. So we're going to move into another set of slides. They're not pretty. They're not have the pretty background and the colors, but they're really content laden. And content laden. They're content laden. Anyway, if you want to spend more time with me, then you have to book a call. This program for doing these webinars is a program. Then I see a lot more and more realtors and mortgage brokers are giving these calls, these webinars, and it's a great way for you to get to know me and for you to decide. Because really, I mean, ultimately, every realtor, and by the way, the builder and all the sellers, they pay the commission. Oh, there's a new twist to the story, and I'm going to talk about it in a minute. But in the olden days, the buyers didn't pay the commission. Now it gets a little bit more technical. There's this big realtor lawsuit, and I'm going to talk about it in a minute. So, what are your next steps? We talked about that enough. Book a call, get a pre-approval, go house shopping, and questions. I can take generic questions, but specific questions I want to go ahead and save for the one-on-one. All right, so we're going to move into another set of discussion here, and this is really, really interesting. But first, I'm going to give you some definitions. Let's start with who the players are, and don't take any notes. I'm going to whip through this because you don't need to know this, but when it comes up, you're going to say, oh, yeah, that Randy guy, he talked about it. So let's talk about mortgage loan officers. These are mortgage broker people who work at the bank, they work at a mortgage broker, they work at a credit union. They're involved with collecting your documentation, and they serve as the, let's call it when you're on my team and I want you to get this loan, but there's an underwriter who's going to be determining whether you get that loan. And what we're going to do is we're going to try to paint a pretty picture of what a great borrower you are. I, or the mortgage loan officer, is your advocate. And the underwriters on the other side working for the lender saying, oh, this buyer, this borrower has this, and what is that? And we need an explanation. And we do a lot of explanation letters because there are things that you cannot overcome, but there are things that we can overcome, like medical bills are not going to count against you. So if you've not bought a home because of medical bills, that's not going to affect you like it did in the olden days. All right, a mortgage broker is somebody who works kind of as a middleman between lenders. They don't fund the loans themselves, but they match borrowers with lenders that best suit their needs. And the mortgage broker is going to shop amongst different lenders. And I'm going to open the door at the end of this part of the presentation and show you what it looks like on how mortgage brokers that work for the borrower interact with wholesale mortgage brokers that want to lend the money but don't do business with retail buyers. That's a wholesale lenders. They don't do business with the public, but they lend every day through mortgage brokers. Retail lender, it's like going to Walmart, you go to your bank, you go to your credit union. They all offer what they offer. They do not get creative. Correspondent lender, I don't know why I even have this in here. You don't need to know it. Direct lender, portfolio lender. Okay, mortgage servicers. It's very likely that when you borrow the money from a particular lender, Rocket Mortgage Wholesale is likely going to sell your loan, the servicing aspect, to somebody else. And when you sign your mortgage documents, you're going to see that there's a document saying that they're not going to be holding it. So you may borrow the money from Cambridge Mortgage or Cambridge Wholesale Lender, and then Mr. Roberts may end up being your mortgage servicer. And mortgage services can change over the life of a mortgage. So if you start getting correspondence saying, your loan is no longer being serviced by your current mortgage servicer, and soon it's going to be handled by another mortgage servicer, this is not unusual. All right, the secondary market investors, Fannie Mae, Freddie Mac, Ginnie Mae, these are government entities that act as the ultimate funding for mortgages. Mortgage brokers will make loans and then they'll basically sell them to these government entities. You don't need to know this, but when it comes down to it, there are two basic generic kinds of mortgages. They're called qualifying mortgages and non-QM, non-qualifying mortgages. Now, you're all likely going to go through qualifying mortgages. But when it comes up, these Fannie Mae, Freddie Mac, and Jennie Mae, just know you'll never do business with them. But yet, when they're trying to decide whether to give you the money, and they're talking about qualified mortgages, it's because that mortgage is ultimately going to end up in one of these government agencies. And you don't need to know this, but for the sake of education, you're getting education. Private investors, you're never going to deal with that. All right, we talked about the underwriter. You know, if I'm your advocate and I'm the good guy, the underwriter's the bad guy or girl, and my internet is unstable, oh my goodness. Hopefully we won't lose each other. Uh, they're going to evaluate your credit worthiness, your debt to income ratio, your financial history. They're going to assess the value of the property, and they're going to approve and deny your application. And we may, and many, many times, we've got a 45-day dream or 30-day dream of closing, and we don't get the approval. And then we have to go through a period of time to satisfy the underwriter. You're likely going to lose that house if they can't do it in timely fashion. Your rent, your lease is coming due. I mean, this is a stressful thing, and I don't want to scare you off. I think I did scare off somebody. We lost a participant, but that's okay. The appraiser is an independent person who is going to assess the value of your property. They're going to conduct inspections. If it's FHA, that appraiser is going to go out there, which is in your best interest. So you want the appraiser to give you an honest market valuation, and you want them to make sure that the property you're buying meets not the insurance requirements, but meets the requirements of the lender. And though you're going to have a home inspections inspectors make mistakes. The appraiser is another way that when they come in and say, yeah, it may pass a home inspection, but it doesn't satisfy FHA's requirements. The title company in Florida, we use a title company. Up north in a lot of states, they use an attorney. And down here, we use a title company. When you do your transaction, you don't give the money to the seller. You give the money to a title company. The mortgage company gives the money to a title company. You go in, you sign your documents. If you're getting an FHA mortgage, it might be 1.5 inches or 2 inches deep, full of documents. You'll sit there for a half an hour, 45 minutes, an hour signing documents when you're getting a mortgage. Closing agent, escrow agent, we use title agents down here. What does it look like to shop for a mortgage? And I can't tell you, nobody talks about this, but you look in the paper and you see, I don't know, Yahoo Finance, mortgage rates are 6 7/8, or mortgage rates are 7%, or mortgage rates are 6.5%. Let me tell you something. I call it the teaser rate. I may be the only one that calls it a teaser rate, but that is for the most qualified borrowers who have the most money down, who, it's rich people with great credit get the best deals. If you have a challenging situation, you're not going to get that teaser rate. Oh, and there's more. You're buying a condominium. Oh, that's 0.5% higher. So if it quotes 7% and you're buying a condo, it's now 7.5%. Oh, you've only been on your job for 2 years. That's going to cost you 0.25%. Oh, they're going to ding you every which way they can. Have I scared you off yet? I just want you to be realistic in your expectations. All right, so I talked about wholesale mortgage brokers spend their days trying to get retail mortgage brokers to place their money. Every day, I get emails from wholesale mortgage brokers. Oh, we've got this special. Oh, we'll take a lower credit score. Oh, we'll give you 0.25% off. Wholesale mortgage brokers do not do business with the public. They only do business with retail mortgage brokers. I'm a retail mortgage broker. And every day I get, and here it is, we're going to look behind the curtain. Every day, I hope you can see this. I was stockbroker. I call it the insight sheet. It's not really, but this is what it looks like. There's 651 lenders on this particular day offering qualified mortgages. And this is what it looks like. There's a bunch of columns you can't see. The name of the lender and all kinds of information, their contact information. But I wanted to show you that every day we get up and we see this. So this lender is going to have, I don't know, 5 million, 50 million, $100 million to offer at 6 5/8. And what do you think happens? Everybody looks on this sheet and they say, oh, the best rate is 6 5/8. And then here's another lender that will give you 6 3/4. And here's another lender who will give you 6 7/8. Now I want to show you this column right here, cost to borrower. If you want to get this 6 5/8, it's going to cost you $1,247 per 100,000. If you want this 6 3/4, it's going to cost you $707 per 100,000. If you are willing to take 6 7/8, 6.875, they're going to give you $93 back for every $100,000 that you borrow. Here, they're going to give you $805 back. And this is called lender paid, and that's because the lender's paying the commission. It's kind of complicated, but there it is. You've looked behind the curtain. Every day we get a sheet, not a sheet, it's computerized now, but in the old days, and we would know what the rates are and how much it would cost you, cost to borrower. All right, let's move on to where I'm going to coach you on how to buy a home. And before I do that, I'm going to talk about sellers. Sellers can be emotional. Sellers think that oh, you want to buy my home? Oh, my home is so special. You made an offer on my home? That means you want my home. And sellers behave poorly. In fact, as we ponder about seller behavior on a regular basis, they make unreasonable requests, they throw temper tantrums, they threaten to walk away, they make the buyer thinks, I'm not doing business with this person. They're bad. I don't like them. I got to tell you, it can be very emotional. And by the way, buyers are emotional too. If you're on this call, you're likely a buyer, and you're likely going to spend more than a few times being very stressed. And what you need during those periods is you need someone on your side that's going to tell you. I constantly counsel my buyers, relax. This is not a fork in the road. Now, sometimes it's going to be me calling up and say, hey, we've got to make a decision. But you just need to understand this is going to be very stressful, and it's normal. And you're going to have to go through this if you want a house. Now, I mentioned that in the old days that the commission was paid by the seller. Now, if you Google realtor lawsuit, you're going to find out that the world has changed. Realtors will not show you a house without you signing a buyer's broker agreement that outlines the commission. And realtors will do everything in their power to get the seller to pay that commission. In fact, you may not be able to buy a particular house if the seller will not pay the commission. And you're going to find that if you don't get properly counseled about this, you're going to find, I didn't mean to be so negative, but here I am saying how hard this is because I've done this and I want you to understand it. There's a term that you've probably heard, but not in this context. You need a gladiator. You need somebody who's going to be out there that's going to be in your corner, that's going to look out for your needs and interests, who's going to handle the challenges that you're going to face, who's going to explain to you when it's time to walk and when the hurdle that looks like this is a hurdle, how are we going to overcome it, is not as big as it appears to be. Now, we're not agents in the sense that we can make decisions for buyers or sellers. We have to go to the buyer and say, hey, we have the situation and here's what it is. And then you're going to go, how am I going to make this decision? I don't know what to do. And you're going to ask. And it blows us away, realtors and mortgage brokers, when buyers and sellers don't ask, what's your opinion, Randy? What do you think I should do? And that's the most, I go into a restaurant and there's a waiter or waitress comes up to me and I say, what do you recommend? I mean, what do you, oh my gosh, you should, this place has the best. I don't know what it is. I try all kinds of different foods because I get advice from somebody who knows more than me. It's like buying a suit. Or not that I buy suits anymore, but in the old days, there's nothing better than having a knowledgeable person that's going to be in there telling you what you don't know. So let's break it down, the home buying process. I got 20 minutes to tell you everything you need to know about home buying. All right, so that's not going to happen, but I'm going to give you a good background. Either you're going to be a cash buyer, or you're going to be FHA, or you're going to be a VA or USDA, or you're going to be conventional, which is everything else. And what I told you earlier was PMI is private mortgage insurance. It's going to add $150, $200, $250 a month to your payment. And you want to avoid it if you can. But if you're going FHA, you don't have a choice. And let's face it, it's easy when you don't have a choice. You don't have a choice. It's going to be calculated into your payment. And if there's any way you can avoid it, you can and you will. But if you're FHA or VA or USDA, you're going to be paying it. But it stands for private mortgage insurance. Basically, it's an insurance policy that they're charging you for because you're not the greatest borrower. That basically they're inducing the lender to lend you the money, and you're paying for insurance in case you don't pay for the property. All right, the timeline is really critical. You might consider learning this. You sign a contract today, 3 days later, your deposit is due. 15 days later, your inspection period ends. 30 days later, you must correspond with the seller or the seller's agent and verify your financing. If you do not get do that correspondence and you don't verify your financing from your lender, then you become a cash buyer. And if your financing falls through after 30 days and you haven't done this step, you can lose your deposit and theoretically get sued. All right, then we have the appraisal, which is going to come after they verified the financing. Then we have the walkthrough and we have the closing. So what's this going to cost you? Home inspections can run $450 to $600 to $1,300 for a home inspection. You've got what's called a wind mitigation. I should have wrote out mitigation. If you're buying a 1970s or 1980s house and you don't do a sewer inspection, you're taking a $10,000 or $15,000 risk. My most recent retail buyer getting a mortgage, I went through my checklist and I said, by the way, this is an older home. We should get a sewer line inspection. And it failed. It was cast iron pipes last 40 or 50 years. All these houses have bad sewer lines. In this case, it was a little bit more because they had to remove the toilets because they couldn't get the camera down there. Then they had to reinstall the toilets. But we ended up having a really bad sewage line, and they quoted $15,000 to repair it. And that didn't include fixing the floors after they were torn up to get to the second bathroom. Long story short, I was able to get a $10,000 price reduction. I'm told that people like stories, so let me finish this story. My buyer was putting $80,000 down. He had sold his house and he was buying another house. He was putting 80 grand down. And he said, Randy, I'm not going to be able to afford fixing this. Even if they give me the discount, I don't have the money if we need a repair. So we came up with the idea of him only putting down $70,000. We saved $10,000, which he's holding right now in case the sewer clogs up. Right now, it's just him and his wife. They're not going to be flushing anything beyond the necessary. And they're going to be very careful about dealing with this because they know their future is a new sewage drain line. All right, if it's a rural property, a septic inspection, most septic tanks fail in my experience. And it's a great way to get a brand new septic tank. So you've got to do a septic inspection if you're buying a home with a septic tank. All right, a credit report. Now, you may pay all of these and still not get the house. It may very well be that we find a deal breaker in there after you spent all this money and we walk away. Now, if we do it right, you're going to get your deposit back, and your deposit's going to be, we'll talk about that in a second. But back in the day, when the market took off in 2018 through 2020, properties were not appraising. Lots and lots of properties were selling way over the appraised amounts. And I talked to one buyer who I never got to work with, but he had 3 houses where he paid for the inspection, he paid for the appraisal, and he didn't get the house. And it happened 3 times. We're not in that kind of market right now for the inspect. We're going to have a good idea that it's going to appraise, but we're not going to know if there's going to be a deal breaker in the inspection. All right, if you're a cash buyer, you can assume around $500 in closing fees. But if you're financing, you better assume around 6%. So if you're buying a $300,000 house, we're going to look at $18,000 in expenses to buy a house. Now, ideally, we're going to get the seller to pay it. And we're going to get the seller to pay for the commission. And I could go through all of these. Why is it so much? Why is it so much to buy a home? And if you get on a call with me, on a Zoom call, I'll actually pull up some of the closing statements to show you what it looks like. And I'm not doing this to scare you off, because this is an adventure. This is a challenge. I had a lady once tell me, well, if I have to jump through a lot of hoops, I'm not doing it. I said, ma'am, you are not getting a house. And she did not get a house, at least not from me. All right, now when you do a contract, even if it's let's say we get you a 203H, no money down deal, even if there's no money down, you still have to put up an earnest money deposit. Now, generally, we try to do $1,000 or $2,000, but they want 1%. If you're buying a $350,000 property and the selling agent says, we're not doing 2,000 down, we want 3,500 down, that's normal. A lot of times I've gotten away with doing a smaller deposit, but what happens if you do your one, let's say you put the 3,500 down and you end up with a no money down deal, you're going to get the 3,500 back at closing. Watch those dates. Don't lose your deposit. You got to have a gladiator on your side that's going to make sure that you don't mess up. All right, during the COVID market, and I bring this up because it was such a unique time. The COVID market, FHA buyers couldn't buy houses. They couldn't get sellers to pay closing fees. Buyers were paying more than the appraised amounts of homes. They were paying cash, and they weren't doing inspections. And a lot of them are deeply regret their behavior. But a lot of them were homeless in the sense that they couldn't go into the office. So they had to buy homes where they could work at home. And we saw a lot of people from up north who found out they didn't have to go in the office. They didn't have to live in Connecticut and some high income tax state. They found out they could work from home. Well, if you can work from home, you might as well be on the beach in Florida. So what's your situation? You're either a cash buyer or you're financing. If you're financing, you're little or no money, or you're 5 to 10% down, or you're 20% down or more. This is basically everybody. Everybody's going to be in this. You're either cash or financing. And if you're financing, you have no money, you have 5 to 10% down, or you have 20% down or more. Now, depending on what kind of buyer you are, will depend on how you're going to attack the challenge of finding a house. Little or no money down and bad credit, you're not getting a house. Okay. little or no money down, but good credit, if we can do a 203H, if you're in one of these counties, I know I have a lot of Orlando people, you're not going to be able to do the no money down 203H. So you're going to be in the find the money game. This means down payment assistance, grants, classes, gifts. Are you an American Indian? Are you a veteran? Are you buying in a rural area? Are you qualified for down payment assistance by your job or by your residence? Do you have bad credit? You got to work on it. You think the credit system is designed to keep you down? It's not. They want you to improve your credit. They want, oh man, there's an ad starting up on my other computer. Let me stop that. The system only makes money on you if you have good credit. So working on your credit, you'd be surprised at how quickly your credit can come back. And if you have no credit, go put $500 on a prepaid credit card and start making payments. I will say that no credit is better than bad credit, but you've got to get a credit score. And if you don't know what to do, you can call me. I'll be happy to give you counseling. All right, down payment assistance, county grants, SHIP, SHIP is a first-time homebuyers program where they'll lend you the money and they might forgive it after 10 or 15 years. You might not realize it, but you could be a first-time home buyer because you haven't owned a home in the last 3 years. Hometown Heroes is a program that's great. It's now available for everybody. It used to be only for first responders and teachers and firemen, but now Hometown Heroes is very available for everybody. Because of that, the Hometown Heroes runs out of money, and then you have to wait for it. And then there's a big pile of people waiting for it. Now, One Home, I really blew it by not preparing the One Home screen, but I can send you a link that will give you houses where this house may qualify for as much as $30,000 in down payment assistance. This house might qualify for $63,000 in down payment assistance. This home may not qualify for any down payment assistance. So it's going to depend on the home. It's going to depend on the location. And there are programs out there that will allow you to apply for down payment assistance. Now, it may end up that you apply for down payment assistance, they don't have funding now, that home is gone, and then we have to find another home when the down payment assistance is available. Some money down. Normally, FHA is 3.5%. So if you have to pay your own closing fees and prepaids, then you need 9.5%. Call it 10%. So if you're buying a home for $250,000, you need 25 grand down if you're paying your own closing fees and your prepaids and your down payment. The benefit to doing that is that there's a lot of sellers that are not going to deal with you if you ask them for the 6% in closing fees. They're just not. And what you're going to find is that really nice houses are going to come out. Oh, it fits all my needs. This is the perfect house. But it's a brand new home, a brand new listing. And new listings the hot new listings go under contract in 7 to 10 days. And hot new listings don't go FHA. So if you come to me and you say, I have no money down, I need closing fees help, and you qualify, but the houses that you're going to get the choice of are not going to be, you're not going to want those houses. You need to have some negotiating power, and you're going to get that power if you have 6% in closing fees and you have 3.5% down and you're in Orlando, I can get you a way larger choice of houses. But if you have to ask the seller for closing fees, it's very likely that the population of homes that you're going to be able to buy is going to be weak, and they're all going to be picked over lousy homes that you're not going to want. God, that sounds so negative. In a sense, I'm kind of glad I don't have 50 people on this call. But Bernadette, Carla, iPhone, Jose, and Nikita Epps, thank you for joining me and allowing me to practice my presentation without too much stress or pressure. But please don't take my negativism or my pessimism the wrong way. It is what it is. And you need an advocate, you need a gladiator that's going to help you. Oh, you're welcome. Thank you. I got a comment. Anyway, I want to be respectful of your time, so I only have 5 more minutes. All right. I talked about that 203H no money down FHA loan. This is going to save you 3.5%. So we still got to get the seller to pay the 6%, and we got to get the seller to pay the realtor commission. And if you're a 20% down and you've got your closing fees, you're going to get the best rates, you're going to get the best terms, you're going to get the best pricing, you're going to get a good deal. You're going to have leverage when you negotiate, and you just got to understand that FHA first-time home buyers, I don't want to say they're discriminated against, but not the buyers themselves, but the loan itself is the least attractive buyer. They're the most likely to blow up. They're the most likely to have issues. The houses don't appraise. The houses don't pass inspection. The selection of houses is weak. Sellers, I talked about sellers. Sellers get to determine what kind of buyer they'll entertain. When they list their home, the listing agent does a determination about how far the seller is willing to go on behalf of the buyer. Now, when I work with a seller, I tell them, you're going to get the most money from an FHA buyer. FHA buyers will pay full appraised amounts. And the seller gets to decide what they're going to offer. You'll see, like I live in Pasco County. In Pasco County, there's 4,100 properties available. Only about 1,900 of them will let you buy at FHA. They don't even let you. It's not an option. Probably 800 of them are cash only. Hot, great, cheaper, well-priced houses, they sell in the first 7 to 10 days to cash buyers. So it's a real challenge. I don't want to be negative. Your buyers want a good deal. You're going to go on Zillow and you're going to see all these houses. And if you come to me and say, hey, I need a loan. Oh, you're FHA. I'm going to send you a list of houses. And you're going to go on Zillow and you're going to see all these great deals. And you're going to say, wait a minute. Randy didn't send me any of these houses. And the reason I didn't send them to you because they're not FHA houses. These sellers won't sell them to you. But everybody wants a good deal. So if you go into a neighborhood and you say, there are 28 properties in this neighborhood, and there's what's called a bell curve. Some of them are cheap and some of them are expensive. And you're going to look at the cheap ones, but the cheap ones won't sell you the house. And generally speaking, in my experience, mortgage brokers don't counsel or coach their buyers to understand this. You want a good deal. Well, the good deal department isn't FHA. So if you end up coming to me for a mortgage and I'm coaching you on this, I'm going to explain to you why you're not getting a good deal and you're not going to like it. And that's just the normal situation. But it's a whole lot better to know going in what this challenge is, as opposed to going out there shopping. And like during the COVID market, all these FHA buyers, they didn't get houses. And to this day, many of them don't even understand what happened. Why couldn't I? Every time I made an offer, I didn't get it. They were 30, 40, 50 offers on these houses. And none of them considered FHA offers. Why would they? They got to go through inspection. They got to appraise. They got all these challenges. So sellers didn't consider FHA buyers. Theoretically, when a seller puts FHA on their listing, they are saying that they will make it past FHA inspections. So if you're an FHA seller, then you are agreeing that you will make repairs. You're also agreeing that you agree that it must appraise. And sellers are required to sign paperwork that stipulates these responsibilities. But my experience is these sellers are not being coached. They don't understand it. They think it's as is, it's as is. But if they're properly coached by their listing agent, the listing agent will explain they're going to get more money from FHA buyers. FHA buyers are motivated. FHA buyers are great, except when they're not. For the seller, FHA buyers are the most likely buyer to put it under contract and then have it fall through. Inspections may reveal repairs, and the seller is not willing to make them. Sometimes it's 4 or 5 weeks into a transaction before the deal blows up. Some sellers have had bad experiences with FHA transactions and just refuse to consider FHA buyers. When a buyer comes to a realtor, they always want to know, do you have a pre-approval? Do you have a pre-approval? You know what I want to know? I want to know if you're FHA. Are you an FHA buyer? Have you been coached about FHA? Do you need closing fees? Did your mortgage broker explain to you about your need to ask for closing fees? I've taken people out to show them houses only to find out that they needed closing fees and the mortgage broker never told them. Hot new listings, don't go FHA. Multiple offers. There's 6 offers on this property and we're FHA. Forget it. Let's go shopping. We're not getting this one. Homes that need work won't pass inspection. Good deals generally don't go FHA, except in special situations. Now, I've gone over my hour. I apologize. I'm going to tell you a story. I did a deal recently. Well, it's probably been a year now. I wasn't involved in the transaction, but someone I know very well had a probate house. It was terrible. It would never go FHA. But the realtor was working for the probate attorney and they were clueless. Come to find out, the buyer was a contractor. The realtor representing the buyer, I'm like, this is not going to go FHA. They said, will you let the buyer make the repairs? And nobody, I say nobody, but obviously it happened, but it's very unusual. But they let the buyer come into the home. And for 2 weeks, this buyer was bringing equipment in and a new pool pump and fixed all the stuff that was fixed that needed fixing, changed out things that failed the inspection, had this big list. And this guy came in there and he spent, I don't know what, $5,000, $7,000 fixing a house that he didn't own. And he bought it FHA, and it's a miracle. Hallelujah. Here I am. You can't do this, you can't do that. And then here is a story where I was wrong. Failed inspections, current market, condos, don't buy a condo. You know, if you want to buy a low maintenance property, look at townhouses and villas. Don't buy in a building over 3 stories. HOA fees, homeowners association fees are going up and up and up. Insurance is going up and up and up. Don't buy in a flood zone. For more information, thank God I'm almost done. I'm losing my voice. I don't know if you can tell. I'm sitting here sucking down some tea. You need an advocate, you need an advisor, you need a gladiator in your corner who's going to look out for your best interests. You don't want to learn from your mistakes. This is me, Randy Jenkins. I'm going to wind this up. I'm going to invite you again to book a call with me and tell you this wasn't my best effort, but I enjoyed it and I hope you did. I've done a lot of transactions. Those are some of them. That's unnecessary slide, but I'm going to call this thing done and thank you for staying on as long as you did and invite you to book a call. And if you don't want to book a call, that's okay. But if you want to call me and just say, hey, I was on one of your webinars. I want to know. I want to know. Tell me what to do, and I'll be happy. What about VA loans? Will they accept VA? That's a great question. The seller gets to decide if they're willing to accept a VA loan. I don't know why they wouldn't. VA has only one thing that makes it different from an FHA loan for a seller, and that is that VA won't let the buyer pay for certain buyer expenses. So for a VA loan, it'll cost a little bit more for a seller. But if you're a VA, that means you were in the military, and we want to thank you for your service. And I'm going to go out of my way. I love VA. I'm going to go out of my way to get you a home. Well, if there's no more questions, I'm losing my voice. I appreciate your patience. Thank you so much, Bernadette, Carla, iPhone 2, and Nikita Epps. It was great. And I wish you all the best and good luck in your endeavors. I'm going to end this call now and thank you again. Bye now.